Reserve Bank Governor Phillip Lowe will be questioned in Senate estimates tomorrow as the central bank sends a distress call for the government to pull out all stops to tame inflation. Joining me now is the Greens economic spokesperson, Senator McKim. Thanks for your time.
Thanks, Tom.
Made a pretty drastic call. Asked Phil Lowe, said that the Treasury should ask for his resignation and reverse the latest rate rise. I mean, that would effectively end the independence of the RBA, wouldn't it?
Well, I'll make a couple of points there. Firstly, independence should not and never should equal a lack of accountability. And Dr Lowe has to be accountable for some of the things that he has said and that the Reserve Bank has done over the last year or so. That's the first point. Secondly, the powers are there for the Treasurer to step in and override decisions that are made by the Reserve Bank. These are the Harold Holt powers. They were introduced when Harold Holt was the Treasurer, and it is abundantly clear that those powers were specifically designed to allow the government to be the final determinant of Reserve Bank policy. So that's what Jim Chalmers should do. He can't keep ducking for cover.
But within the Act as well, there's no way for Phil Lowe to be fired, for want of a better word, other than disrepute, essentially.
Well, look, we all know how these things work. If the Treasurer asked for Dr Lowe's resignation, I have no doubt that it would be tendered.
There'd be a drastic reaction, wouldn't there? I mean, reaction from world markets, there would be thought of Australia heading down a dangerous path. Bonds rates would likely increase, debt would increase.
Well, look, people like to say this will be doom and gloom, but let's have a look at the doom and gloom that's being faced right now by renters and mortgage holders as a direct result of some of the things that the RBA has done. I mean, the RBA seems determined to drive Australia into a recession. It is doing that by smashing renters and mortgage holders for a spike in inflation that, on the RBA's own argument, is substantially driven by supply-side issues, not demand-side issues. That's leaving aside all the assurances Dr Lowe gave that interest rates wouldn't go up, and then they are now massively going up, and people are turning inside out.
As to what's actually happening, and it's very tough for people out there, but in terms of, that drastic, the measure in terms of mortgage holders, the worst possible thing, foreclosures, they're not happening yet, are they? Well, are you not also equally worried or more worried about inflation setting in the economy? That's drastic.
Absolutely.
We've got a third of the country of mortgage holders. Everyone would be affected by
Absolutely. Inflation is a scourge, and it is often the people with the least to lose that end up paying the price. So there's no doubt about that. But make this point. Firstly, on the RBA's own argument, this is substantially driven by supply-side issues, not demand-side issues. Domestically in Australia, what it's being driven by is corporate profiteering. And actually, Dr Lowe agreed in part with that assertion when I put it to him at the last Senate.
I'm not sure he said this is driven by corporate profiteering.
He absolutely said there are some sectors of the economy where corporations are making excessive profits.
But that's not agreeing with your notion that this is driven by corporate profiteering.
He absolutely agreed in part with that notion. But let's just step aside from that a minute and talk about inflation. You want to talk about inflation? The biggest inflationary steam train that is coming down the line are the $250 billion in stage 3 tax cuts. Now, the government cannot keep stepping back and allowing the RBA to use the only tool they've got at their disposal, which is interest rates, when actually there is significant opportunity for Treasurer Jim Chalmers to act.
That's the middle of next year. That's not
drunk. They are coming, and in the middle of next year, inflation will still be above the RBA's target rate, according to the RBA, right?
But that's a long way away. We can see where it's at.
Well, let's in the meantime.
Now, let me ask this. Well, last year we had a lot of rate rises. I don't think you were calling for them to not go ahead then.
We've been calling for some time for these rate rises.
When they started increasing interest rates, you understood why and you didn't disagree with it. Our last inflation figure, the official quarterly most accurate one, was 7.8%. Now you're saying stop the rate rises.
These inflation, on the RBA's own argument, is caused by supply-side issues, like putting interest rates up in Australia.
You're saying it's not all supply. There was also a huge amount of household savings that was stored up because of 0.1%.
Tom, putting interest rates up is not going to impact on global supply chains. It's not going to impact on what OPEC does. It's not going to impact on the war on the Ukraine. These are genuine global, in the main, supply-side issues. The RBA accepts the proposition that the current spike in inflation is significantly driven by those things. What putting up interest rate does is make renters and mortgage holders. It smashes their lives for something that they are not responsible for causing, when actually the government has a massive toolkit at its disposal to address these issues and is failing to do it. That's the crux of the problem.
None of that can be fixed overnight. Interest rates are also reducing retail spending, which will bring inflation down. Let me ask about this, because you talk about the role needs to be accountable. If you do it simply via the Treasurer overruling the RBA on interest rates, that's not the RBA accountable. That's turning this into a political role on interest rates, and that could happen before any single election. Let's put a couple of rate cuts in by the Treasurer of the day. Might not be what the economy needs, but what the Governor of the day needs to.
That's how it used to happen. That's how it used to happen.
And isn't that the whole point? We didn't want that happening?
That's right. But we now need to have a look at this, because the RBA is putting up interest rates because the government has vacated the field. And there is no doubt that whether it's the grossly inflationary stage 3 tax cuts, which will lead to upward pressure on interest rates.
But are you saying the Treasurer of the day should be responsible for interest rates?
Negative gearing, capital gains tax discounts. Like, Jim Chalmers has got a range of tools at his disposal. He could pull those levers now.
But are you saying the Treasurer of the day should be responsible for interest rates?
We are saying that in the circumstances in which we find ourselves, when the RBA is ploughing ahead with driving Australia into a recession, which is going to smash even harder the renters and mortgage holders, that there is an argument for that to happen, yes.
Then they can do it at any time. You're handing the responsibility over to the Treasurer and making it a political role.
Tom, the power is there. It's in the Act. Harold Holt...
But they don't use it. That's the point. If you're saying use it now, they'll use it whenever they want to.
The power is there, and in exceptional circumstances, which is where we find ourselves, the argument is there, and we are making.
But you accept once it's used once, it'll keep getting used. You'd be handing it. You'd be taking it from the RBA and putting it in the Treasurer's hands.
These are exceptional times when the RBA has put up interest rates 9 months in a row, contrary to a promise that was made by Dr. Lowe. Yes, it was a promise. The preconditions that he set for interest rates going up still haven't been met.
It wasn't a promise.
It was most emphatically a commitment that he gave to the Australian people that they wouldn't go up.
I'm not sure I'd call it a promise or a commitment. He certainly led people to have that perception. I'd agree with that. But
well, we'll just have to agree to disagree.
We will.
Tom.
Nick McKim, thank you.